Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within those big corporate filings. Today we're diving into Bank of America's latest report, and let's just say there is a bit of musical chairs happening with their top brass. Alright, let's get into it. This filing, an 8K report, is like a quick update from a company saying, hey SEC, here is something important you need to know. And for Bank of America, or BAC as it is often called, this update is all about who is running the show. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can chat about these filings and more. So, what is the big news here? On the 20th of November, 2025, Bank of America's board of directors decided to officially designate certain management members as executive officers. Think of this like putting a specific title on key players who have major responsibilities within the company. This is important because these are the folks the Securities and Exchange Commission, or SEC, really keeps an eye on when it comes to running a public company. The main man, Brian T. Moynihan, stays as chair and chief executive officer. Underneath him, reporting directly, are a bunch of other big names. We're talking about Dean C., Athanasia and James P. DeMare, who are now co-presidents. Then there is Alastair M. Borthwick. The Chief Financial Officer, Sherry Brunstein, the Chief People Officer, Harry Gopalkrishnan, who handles technology and information, Jeffrey S. Greener, the Chief Risk Officer, Bernard Amensa, who leads the international business, Lauren M. Mogensen, as Global General Counsel, Thong Nguyen. A Vice Chair focused on global strategy, Thomas M. Scrivener, the Chief Operations Executive, and Bruce R. Thompson, another Vice Chair overseeing enterprise credit. Now, this is where the story gets interesting. Just a few months ago, in September of 2025, BAC announced that Dean C., Athanasia, and James P. DeMare were stepping up as co-presidents. They're now in charge of all the company's different business lines. Because of this big promotion, the board has decided that as of the 31st of December 2025, some people will no longer be officially considered executive officers for reporting purposes. So Lindsay D. Hans, who was president and co-head of Merrill Wealth Management, Kathleen A. Knox, president of the private bank, Matthew M. Coder, president of Global Corporate and Investment Banking, and Eric A. Shimp, the other co-head of Merrill Wealth Management, will be stepping down from that specific executive officer designation. Don't get it twisted. These are still important roles, but the official SEC definition of who is on the executive team is changing. While this filing doesn't contain detailed financial tables for us to dissect in this particular section, it is important to remember Bank of America's overall financial health. This kind of internal organizational news doesn't directly tell us if they're making more or less money, but it does signal shifts in who is making the strategic decisions. Looking at what is registered with the exchange, Bank of America has a lot of different types of stock and financial products out there. You see their common stock, which is what most people think of when they hear Bank of America stock. Trading under the ticker BAC, but they also have a whole bunch of preferred stock series like Series E, Series GH, and many, many more, each with its own ticker symbol. They also have things like depository shares and notes, which are essentially different ways people can invest in the company or its subsidiaries. This variety shows a complex financial structure designed to raise capital in various ways. These aren't just random names. Each of these preferred stocks and notes represents different ways the company has borrowed money or issued equity, often with different terms for dividends, interest rates, and when they mature. For example, they have depository shares representing fractions of preferred stock with varying percentages like 6.00%, or 4.125%. Then there are the senior medium-term notes, Series A, step-up callable notes, due the 28th of November 2031. These are essentially loans that BAC has taken out with specific repayment dates and interest rates that might change over time. This broad range of tradable securities on the New York Stock Exchange shows just how big and diversified Bank of America's funding and investment operations are. Now, let's put this into perspective. Bank of America is one of the largest banks in the United States and the world. They are a giant in the financial industry, involved in everything from consumer banking and credit cards to wealth management and investment banking. Think of them as a central pillar in the global financial system. Their closest competitors would be other megabanks like JP Morgan Chase, Citigroup, and Wells Fargo. The signature here from Ross E. Jeffries Jr., the Deputy General Counsel and Corporate Secretary, essentially means that someone legally authorized on behalf of the company is confirming that this report is accurate and has been filed properly. It is a formal sign-off. So, what is the story here? This filing isn't about a major financial surprise or a new product launch. It is a behind-the-scenes adjustment to who is officially classified as an executive officer under the SEC rules. The big news is the elevation of Dean C. Athanasia and James P. DeMare to co-presidents. with the natural consequence being that others will no longer hold that specific executive officer title as of the end of the year. Looking at this from a broader perspective, this move signals a clear strategy to centralize leadership for the core business lines under these two co-presidents. It shows a desire for a more unified approach to managing the various divisions of the bank. The individuals no longer designated as executive officers are still in very senior and crucial roles, overseeing significant parts of the business like Merrill Wealth Management and global corporate and investment banking. Their responsibilities haven't disappeared, but their formal classification for regulatory reporting has changed due to the new co-presidency structure. One notable risk for any large financial institution like Bank of America is regulatory scrutiny. Changes in leadership roles, even if internal, can sometimes attract attention from regulators who want to understand the governance and control structures. However, in this case, it seems like a natural consequence of promoting two key individuals to a higher leadership position. The opportunity here is that by consolidating oversight under two co-presidents, the bank might achieve greater synergy, efficiency, and quicker decision making across its business units. This could lead to better execution of their overall strategy. In conclusion, this report confirms a shift in Bank of America's top leadership structure with a focus on consolidating presidential responsibilities. While it doesn't reveal any immediate financial impacts, it points to a strategic move in how the company is organized for future growth and operational efficiency. The bank continues to navigate the complex financial landscape with a robust organizational framework. Alright, that is our breakdown of Bank of America's latest filing. What is your take on these leadership changes and what they might mean for the company's direction? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching, see you next time.